Hey everybody, John Felici here, Security National Mortgage Company. Good late morning. Well, it's not too late. It's 10:30 a.m. So it's still early for some people. I don't know, some people might even not be awake yet. But hey, want to talk with you a little bit about, loan closing. How long does it take to close a loan? That's a question that a lot of people ask. It's definitely a huge concern for people buying a house. I mean, you want to know, exactly when you're going to be moving, when to schedule the movers, time to take off, utilities, etc., etc., etc. Generally speaking, it takes, in a perfect world, about 30 days to close a mortgage loan, sometimes less. There's a lot of factors that go into how long it takes to close a mortgage loan, for anything from, credit score to loan type, to possibly, documentation required from the buyer. Now, government loans, like for example a USDA rural development loan, those usually take a little bit longer. I think that national average for a USDA loan is somewhere up around like 43, 45 days. The reason that it takes a little longer for a USDA loan, for example, is because with, let's just say, FHA, VA, conventional, any of those loan products, whenever they get underwritten, after the loan is underwritten, then it receives final approval, and then of course the closing disclosure is sent out, and there's a 3-day waiting period from the time that the final numbers are sent out to when you actually walk into closing and sign paperwork. So anyways, those close a little faster. With USDA, it's a little different. Once the loan receives final approval at the lending institution, here, me, the loan has to go to the local USDA field office. And, it can be two types of USDA approvals. You could potentially have an accept, or you could have a refer. An accept means that the loan has met the general criteria of the USDA, and it's usually like a streamlined thing. It goes through pretty quick. If the loan is a refer, that, for example, maybe you had a bankruptcy less than 3 years ago, or maybe just for whatever reason, maybe there's some late payments in the last 12 months, something that somebody needs to look at and make an executive decision and make sure that this incident that was a cause for concern was an isolated incident and it's now done and over and okay. So then the purpose of the loan going to the USDA is all of these government loans are essentially backed up or insured by the government. And so what the USDA does is when your loan goes over there, they're essentially having the final say-so, making sure that it fits the parameters that, they will insure the loan. And then what they do is they set aside money, imaginary money in their surplus, to insure the loan. And then what they do is they issue a conditional commitment, which is basically, or it is, the final thing that we need to obtain a clear to close and close your loan. That little process at the end, the USDA, they can take anywhere from, I've seen get commitments back possibly the same day. If they are manually underwritten loans, which is like the refer status, where maybe there's a bankruptcy or some late payments or something cause for concern an underwriter needs to look at additionally. I've seen them take as much as like a week. So the USDA loan has that extra little bump on the end, and it can take a little bit longer. Now, as far as what you can do as a buyer to make sure that your loan closes on time. Now, every lender is going to do this differently. Me personally, what I do is whenever I receive a purchase contract, I'm going to go in and I'm going to trigger what we call the RESPA to be sent out, which is the loan paperwork. That is the initial disclosure to show you estimated payment, loan amount, the terms of the loan, your rights as a consumer when you purchase a home. And, it's the buyer's responsibility to review these documents and sign off on them, ask questions if necessary. And so once those documents are signed, we're able to order appraisal. Appraisals are, ordered through, in our case right now, we're getting ready to switch over our appraisal system here in a few days, which is going to be absolutely wonderful. But in the past we have used appraisal management companies, which is a third party basically that we order the appraisal through, and then they farm it out to an appraiser on a rotation. And the purpose of that is so that, me, you, the real estate agent, none of us have any ability to know who the appraiser is up front, to influence the appraisal, or to have any involvement in any way. It's just so that we don't, I don't know, twist the guy's arm and make him give us a value or whatever it is. So anyways, so when the appraisal is ordered and the loan disclosures go out, I generally send out a list of needs to the buyer. And depending on the situation, when I pre-qualify a loan, depending on the person and what kind of income they have, I could have anything from just a pay stub all the way up to their tax returns for the last 2-3 years, bank statements and everything. So at the time the loan disclosures go out and about the time we order the appraisal, I'm going to send out a needs list, which is just a list of conditions. Now, the most important thing, I mean, in my mind, whenever someone will send me a list of something, what I try to do is I would want to print that list off, and I would want to cross off the things that I need to get on that list for whoever sent it to me. And when I return those things to the person who asked for it, I want to make sure that everything is checked off on that list. Now, unfortunately, most of the time, when I send out a list for, say, loan conditions, you know, I'm getting back probably about 50% of the things that I asked for, which is, you know, it can make things very difficult because it's kind of like, you know, trying to tell a story. What I'm essentially doing is, you know, I'm trying to convey your story to an underwriter. I'm trying to say, you know, this is why this person deserves this loan, and, you know, the underwriter, so I have to make a good case for you. And if there's missing documentation, you know, whenever I send this stuff up to an underwriter, it can be problematic. It can make it to where I'm unable to submit your loan because I don't have all the pieces to the puzzle. It can make it to where maybe, for example, you know, bank statements is a big one. You know, a lot of times when people send bank statements, they will send, you know, either missing pages or maybe they will send print-offs from the bank, which is like when you send a bank statement, you want to make sure that, you know, you're sending a document that has all the pages, first of all. If it says 1 of 6, then you need 2 of 6, 3 of 6, 4 of 6, 5 of 6, and 6 of 6 to be included with that bank statement. You also want to make sure that identifying information is on there. I get a lot of bank statements, you may not believe it, but I get a lot of bank statements where the person's name, account number, or even so much as the bank name is not on the statement. And the reason that is because when you go into your bank account and you print off an account summary, it's usually just going to print you out literally the account summary, which doesn't have identifying information for the bank or for the individual. So it's like you want to you know, always print out the actual statements, which if you go into your bank account, I mean, you can get in there, most every bank that I've ever seen, you can print out, you know, full statements for each individual month. We're going to generally require 60 days bank statements. Then, of course, you know, in the bank statements, if you have any irregular deposits, you know, a lot of times whenever people are doing down payment, like say for FHA, there's a lot of instances where that money is, you know, taken out of the 401k account. This is a subject where people have a lot of trouble because, you know, everything that goes into that bank account that is more than like, you know, a deposit that's more than 1% of the sales price. So it's like if you've got a $150,000 sales price and he deposits over $1,500, we have to justify, we have to explain where they came from. So a 401k, for example, you know, 401ks have different terms when you take money out. And so for that reason, when we get 401k statements, we're getting a copy of the bank statement where the money was deposited into from the 401k. We're getting something to identify the amount was taken out of the 401k, which usually like a statement will work for that, like maybe a recent quarterly statement or a printout showing the subtraction from the account. And then, of course, we are going to get the terms of withdrawal. This is the thing that people have the most problems with, is the terms of withdrawal. What that is when you take money out of a 401k, sometimes you can take money out of a 401k anytime you want to, and there's no terms of payback or whatever. Sometimes when you take a 401k out, that 401k results in a loan, so there may be a payment attached to it. We need the information to identify the terms under which you took this money out of that 401k account. You know, same thing with deposits. You know, I mean, maybe your family gave you $2,000 to help out with this transaction. Well, what we have to do is we have to verify where that money came from. What we want to make sure of is that that money was not the result of a loan, for example. You didn't go over to Springleaf Financial and go get a loan for $2,000. and you know, the $2,000 that was put in your bank account, maybe that was from your mother, like I said, to help out with the house. So what we would do is we would get a copy of your bank statement. We would get a gift letter from the relative, your mother, whoever it was that gave you the gift, you know, just stating that there's no expectation of payback on this gift. And then, of course, we would get the person's bank statement who actually gifted the money. So in this case, if it was your mother, we would get your mother's bank statement. The purpose of that is to see that the funds were available. Funds that came as a result of, say, for example, non-sufficient funds charges, you know, overdraft, a bounce check. I mean, these are rare instances that this can happen, but, you know, this is a very black and white area. It's either is or it's not. So we're going to get a bank statement to validate where the money came from, and that the money was in fact available and was not the result of some type of a loan or something that's going to require you to pay back money. Because if you're going to have to pay back money, we have to factor that new payment into your debt ratio. So, I mean, it's very important that, you know, if you're working with me, if you're working with, you know, one of my friends in the mortgage industry, whoever you're working with, when somebody gives you a list of information, please print that list off. You know, print that list off. Go through it one by one. I get a lot of people where it seems like that, you know, they'll send about half of the information and then they'll say, okay, what else do you need? And I mean, I hate to be a smart aleck, but it's like, you know, I need the rest of the things that were on the list I sent you. So, I mean, to stop and figure out what it is that you didn't send and then to come back, I mean, it creates a bottleneck, you know. So it's like, follow the steps on there, send exactly what's on there. If you have questions, you'll always ask about it. So everyone, you know, the long and the short answer to this, I mean, the short answer on how long it takes to close a loan, about 30 days. But that turn time depends heavily on the client's diligence to provide every bit of information that has been requested by the lending institution. So, hey, guys, I'm going to go ahead and get back off here. I'm going to get back to work. I'm going to get some things done. But, you know, hey, if you got questions about, you know, loan closings, how long it takes, what you need to do to get approved for a mortgage loan, give me a call, message me. I'm always available for you. You guys have a good day.